Hello and welcome. This is Hot Money on BloombergQuint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I am Agam Vakil, and on that note, let's welcome in our experts for today. We have Foram Parekh of Indiabulls Ventures, Mr. G. Chokkalingam of Equinomics Research, and Lancelot Cunha of ValueX that are joining us on the show at this point in time. Welcome all of you, and thanks for taking the time out. On the show today, we ask analysts about, well, the top 3 stocks that can be bought from among the Tata Group companies. We have a discussion on the NBFC space and which is the best and the worst place NBFC at this point in time. We ask our experts about one stock that they have recommended to the clients recently, and lastly, we talk about RBL Bank that has been under, well, the pump after the first quarter earnings and the subsequent guidance. So we're going to talk about all these factors in the show today. And on that note, let's open up the discussion about the Tata Group companies. Lancelot, I'll start with you. Where are you placed as far as this group's concerned, and what of these companies that you prefer right now?
Well, I think there are always, good companies or bad companies in a group. So at the moment, some of the companies in the Tata Group are doing extremely well, and we believe like companies like TCS would be, one of the market leaders, and valuations are relatively attractive at the moment. So that would definitely be an option to accumulate. The other company that we like in the Tata Group is Titan. It has been a long-time favorite of us, and we continue to hold that stock for our clients. We also see, growth coming in for Titan. Maybe at this point of time, it could be a little bit highly valued at this point in time. But once the consumer demand picks up, and you begin to see again the lifestyle business growing, I think you'll get good returns from Titan. The other is Tata Elxsi, which is more of a engineering services, a niche play as far as the IT services segment is concerned. And we see, it did have a hiccup with results getting impacted in the last quarter. But we think that is more a function of, the orders, etc., getting moved ahead, and a bit of a structural change, because they had a large dependence on JLR for their book, and that has now been overcome by adding more clients from other than JLR, and that business should continue to grow. So I think that also is a good opportunity to look at adding. So these are the 3 companies we look at from the Tata Group.
Okay, well, I suppose Titan and TCS are always the easier ones to call, and actually eventually comes down to the third company, which is perhaps the tougher pick here. But let's see if the other 2 experts also have some of these in their list. So Foram, I come to you on this one. What about you? What do you prefer in this group?
So I also have the same 2 picks, TCS and Titan. TCS, as we all know, on a higher base also, it's reporting very good set of numbers. Now the digital revenue for TCS, I think it is like almost 35 to 40% of the total revenue, and it is growing at more than 50% on a yearly base. So even on a higher base rate, the digital revenue continues to do good, and management is also very positive despite the kind of global uncertainties that we are seeing, and on a higher base. So I think that is very extremely positive for TCS. And Q1 was a seasonally weaker quarter because of the wage hikes and everything, which would have impacted the margins. But now in Q2 revenue, we do not see any hiccups over there. Margins increment would be on the cards because of a seasonally strong quarter and not much of an expenses. So I think Q2 should fare well, and the kind of correction we have seen and the kind of potential that the stock and the company has, I think it is a very good time to accumulate at current market price. Second is Titan, of course, because Q1 was a little sluggish quarter because management also hinted of a volume slowdown, and overall in the consumption pack there was a slowdown, so we can give a benefit of doubt. But then management is already cleared on air that they are now witnessing good volume tractions, and now with the festive season coming, wedding season beginning post Diwali, so the jewelry segment would continue to do good even at a higher gold rate that we are seeing. So eyewear of Titan is doing good, jewelry would be doing good, so both jewelry and the non-jewelry segment is doing good, and the fact that it is corrected and now this current range it's consolidating at, So I think it augurs again a very good buy for Titan. Now apart from these two, I do not see any buying anywhere else.
Okay.
Because Tata Motors, we know for a very long time, the stock is under pressure, and none of the passenger vehicle segment or the commercial vehicle segment is doing good. Even the exports are not doing good. So Tata Motors has been a complete avoid. Tata Elxsi, as he rightly said, it had his order books from Jaguar, and there again globally we are seeing auto slow down.
Right.
So then we wouldn't want to experiment with various other names from the IT sector, and that is why TCS and Infosys would be like a preferred bet from the IT. And again the Tata communications and the consumers and all, I think when the market is so fragile, we just want to stick to earning specific stocks, and that is why Titan and TCS.
Okay, all right. So Foram suggesting that she just has 2 picks right now from the group, and because all the others are in a relatively precarious situation at this point in time. That said, Mr. Chokkalingam, what about you? Where do you stand here?
Yeah, unfortunately, Tata Group is getting into at the receiving end due to the deflationary condition across the world. So basically, they have metal, Tata Steel, and then many small companies into metal, steel rather, and then you have Tata Motor again getting impacted by world over slowdown in the automobile. So I don't find many ideas worth investing in Tata Group.
Okay.
Of course, there are 2 companies like Titan Global, and also Tata Elxsi. But the first 2 have, in fact, all 3 have a problem of overvaluation.
Right.
And apart from that, Tata Elxsi has a problem of depending on 50% of the revenue on automobile sector worldwide.
Automobiles, yes.
So that leaves the space for just 1 or 2 stocks. And I would agree on TCS. It could be a defensive bet.
Right.
But I am bullish on Tata Power.
Okay. All right.
Yeah, because stock has corrected a lot. It's below adjusted book value. I see opportunity for Tata Power to emerge as a thematic play because they are going quite aggressive in electric mobility, charging stations.
Yeah.
They already tied up with IOC, BPCL, HPCL, Mahanagar Gas, and they have power also. The power generating capacity in 2 major cities where Delhi and Mumbai, the electric vehicle population is likely to grow in a big way in the future. And second, they have gone very aggressive on solar power. That is also going to be, very positive for the company. So therefore, we would suggest only these 2 stocks, TCS and Tata Power.
Okay, so we do have one more new name coming in as well, and Tata Power comes into the mix. Of course, as for the reasons suggested, that looks like an interesting play. So for now, largely we are with 4 ideas essentially. The 2 obvious ones is TCS and Titan, and the 2 others come through are Tata Elxsi and Tata Power. So we need to keep an eye on some of these as we move in, of course, to trade. But we must remember that the entire Tata Group has seen some amount of flack of late, and this volatility is always going to be a part of the stock market. That said, let's move on and talk about one sector which has seen again a lot of volatility, and that's the NBFC space. The real question is, while there are many out there, and this is in housing finance, in microfinance, what NBFCs should one prefer and what NBFCs should one stay away from? So Foram, I'm going to start with you on this one. Where do you stand? One bet that you want to buy and the other that you would stay away and avoid?
So one I would buy is Bajaj Finance, even at this current valuation and current market price.
Right.
Because if we see, I think Bajaj Finance is a very well penetrated stocks across geographies, and the kind of lifestyle we have, I think there's a lot of room for Bajaj Finance to grow because it has completely changed the lifestyle. People do want to buy only on EMI basis, and on every kind of product in every geographies, Bajaj Finance is there to serve.
Right.
So then I feel because there are not many players in the in the sector, and the sector is again at a moderate level, not very saturated. So I feel though the kind of run up Bajaj Finance has seen, but it will continue to grow even at the same pace, on a higher base. Wherever Bajaj Finance found a little caution, in the automobile sector, they literally they stopped lending it to the auto sector, and they were very clear with their guidance.
Sure.
So I think it is a very good move to be a little cautious rather than being aggressive when the time is to be cautious, and that's what they have done. Again, they are coming out with a QIP of $1 billion, so they are the first one to acquire the money, and that would continue to aid on the profitability and the growth aspect. So I think Bajaj Finance, because of the kind of penetration it has and the lesser peers in the sector, I think it has a lot of room to grow even on a higher base. So Bajaj Finance would be my buy on dip strategy. One stock which I would want to stay away is DHFL, because DHFL, the kind of news and the credibility lost in everything we have seen, I did not see the company getting any kind of funds or for their operations or any kind of loan book growth or anything. So DHFL, I think it's a complete avoid and it's a sell on rise strategy.
Okay, so you have it preference towards Bajaj Finance and staying away from Divan Housing Finance. Mr. Chokkalingam, what about you?
Yeah, for analysts, it's easy to find out which is the worst NBFC.
Yes.
So now it's also very difficult to find out which is the best NBFC.
Right, sure.
Yeah, the best company need not be available at attractive valuation.
Attractive valuations, yes.
So what happened to IndusInd Bank? What happened to RBL Bank? They were commanding a huge premium in the market.
Right. Yeah.
And see the way they were corrected. So coming from value investment strategy, I never try to chase. Once you miss the bus, better you avoid it.
Yeah.
So from that angle, I would have a bias for Sundaram Finance.
Okay.
The company is well managed historically for the decades. The excellent quality of management. Stock also available at 3 times book value, and the company has got an excellent net worth base. Unlike DHFL, where the net worth fund is just 5% of the total capital, here it is about 17% the net worth as a percentage of total capital. Very conservative management. Even in the tough time, they are able to grow. Quite well diversified. So this is a stock I would suggest for medium to long-term investors.
But let's do the easy part as well, Mr. Chokkalingam. Any stock out there in the NBFC that you want to avoid, and if it's that easy, if you could tell us 2 or 3 stocks that you want to avoid.
I mean, I would avoid DHFL, Srei Infra.
Okay. All right.
These are the 2 I would avoid.
Okay, fair enough. So, we have a few more names coming through, but let's see if Lancelot has more. So, Lancelot, what about you? Something that you like and something you dislike?
Yeah, so I think, the NBFC sector suffers from, or probably gets triggered off by reputational risk, good financials, and strong corporate governance.
Sure.
So, if you see, all these 3 things are very well present in a company like Bajaj Finance. So it's got a good reputation, it has strong financials and good corporate governance practices. The only thing that is negative about Bajaj Finance is the high valuation.
Right.
So probably one has to wait for some market event whenever there's a correction, and then look at accumulating this stock, because obviously when you're paying a high price, then your returns are also going to be relatively lower and maybe difficult for you to really beat the market returns in that sense. So I would like, I think the best NBFC is Bajaj Finance, but one should wait for a correction, and could be a serious correction, because like Chokka was saying that, these high valuation companies can also correct significantly.
Sure.
We did see Bajaj Finance a couple of months back at 2,400, 2,500 levels.
Yeah.
And now it's gone back to 4,000.
Right.
So you do see these events happening, and one should take advantage of the event and then look at accumulating this.
Okay.
As far as the worst is concerned, like I said, because of reputational risk, bad corporate governance, and weak financials or fundamentals, DHFL seems to be the one to avoid completely.
Sure.
Because even if it improves on the financial side, the reputational risk and the governance still will be an overhang, and that could take a very long time before the investors forget.
Right.
So this is the company which one should avoid.
Okay, fair enough. So they have it about plenty of ideas out here as far as the NBFC space is concerned, and of course the one that stands out in the discussions is Bajaj Finance essentially. But let's move on and then ask our experts about one stock that they have recommended to their clients recently. So, Mr. Chokkalingam, what about you? What are you trying to tell your clients? What should they buy these markets?
Yeah, just before that disclosure, whatever we recommend, we personally hold, and we hold for most of our clients.
Okay.
And we have been aggressively suggesting a client our one pet stock, which is Cyient Limited, IT stock. The reason is that, first of all, the stock has come down about 43% from last 18-month high, but that is not the only reason. In fact, I have been talking about a consolidation in the mid-size IT space for last 5 years, which has already happened with so many companies, Polaris to Patni Computer to Emphasis. And if you look at all these companies till Mindtree, the valuation was around 1.5 to 2.5 times enterprise value to annual revenue. Whereas Cyient is available at around 1 time annual revenue. And in terms of PE also, it's just about 11 PE. Most other deals have happened anywhere from 17 to 22 PE. And I continue to believe that the consolidation would continue. And it may not happen for Cyient, but if it happens further in the industry, there will be re-rating of valuation multiple for Cyient. And also, it depends on engineering services to the extent of 50% of the total business. That also gives me a lot of confidence, unlike Tata Elxsi, which depends heavily on auto. And recently we saw the news that Japan Mitsubishi having an indirect stake of about 10% of the stock. That also gives you a lot of credibility. So therefore, we have been recommending and buying Cyient.
Okay, so Cyient is the pick for Mr. Chokkalingam. Lancelot, I come to you. What are you recommending to your clients right now, and why?
Well, we are recommending HDFC Limited. Yeah. The reason being, like it has also borne the brunt of all the NBFCs. The prices have corrected, so we've seen this stock also correct. And if you look at, like I said, what are the drivers of that industry? It is, good financials, good reputation, and good corporate governance. All three are present in HDFC Limited, and we feel that HDFC Limited will be able to expand on two of its books. One is the education loan book, which is growing at a significant pace, and that will now see some sizable, value in terms of percentage of its overall assets. The second is its rural push. So they have been moving into the affordable housing space, and that's an area they will continue to grow. Thirdly, we feel that because of its strong reputation, it's able to generate as liabilities in terms of deposits and bonds, etc., at much lower valuations or lower costs than the others, which will help it maintain its net interest margins despite pressure on the lending side. So for these factors, we feel that this can be a good long-term story, and one can look at holding on to this for the next 2-3 years. You should be able to get good returns from this.
All right. So, well, that's one very major frontline stock also which comes into the fray now. And with that, Foram, what about you? What are you recommending?
So we had recommended Maharashtra Scooters when it had fallen from 4,500 levels. So we did recommend it, say 3,700 levels, and it is purely on the play of Bajaj Finance, because we believe that someone who has missed on Bajaj Finance can play it via Maharashtra Scooters. Because if we look at the PNL, the revenue driver for Maharashtra Scooters, it purely comes from Bajaj Finance investments. So now that the investment of Maharashtra Scooters is yielding good returns, it will directly benefit Maharashtra Scooters, and unlike other holding companies where it is not holding in other Bajaj Group but only in Bajaj Finance. So Bajaj Finance, where it has a market cap of almost like 2.293 lakh crores, Maharashtra Scooters has merely like 4,000 to 5,000 crore as its market cap. And if you look at the net worth of Maharashtra Scooters, I think it is around like 11,000-12,000 crores. Whereas the market cap is just 4,000 to 5,000 crores. So I feel that it is highly undervalued, and Maharashtra Scooters is a pure Bajaj Finance team, and Bajaj Finance is on the changing lifestyle and everything. So Maharashtra Scooters will indirectly or directly benefit out of the Bajaj Finance price rise, and that is why we can play the Maharashtra Scooter theme.
Okay, so there you have it, some three very interesting ideas coming in from our experts. These ideas have been recommended by our experts to their clients recently. And from there on, we move on to, well, the final topic of discussion, and that is to do with RBL Bank. Now, Mr. Chokkalingam to a certain extent has already alluded to the fact that this bank has been extremely volatile. After reaching peak valuations, it has come off quite substantially. Sure, it's gaining 4% today, but not before, well, moving and trending well below the mark of 300 rupees per share. It's been a patchy, stock to trade. Considering, as you can see on your screen there, it's lost as much as 52% in just 3 months. And even on a 12-month basis, over the last 1 year, it's down as much as 41%. So for traders as well as investors, it's been a tough one to hold. But well, the question is, at 300 rupees per share after this fall, what do you do with RBL Bank? Mr. Chokkalingam, this one is for you.
Yeah. The problem for this bank to crash so much is that not only NPA issue, it's also due to the fact that it was commanding very huge premium on the market. It was commanding, if you look at the market cap to the business, it was at 25%.
Right.
And the price to adjusted book value was over 4 times. If you look at other mid-sized private banks with a business size of about 1.2, 1.3 trillion rupees, they were trading at 0.5 times adjusted book value.
Right.
So the investors missed out the fact that today the banking penetration has peaked out in the urban cities, and rural it is there, but the margins are low.
Right.
And on a small base, this RBL Bank was growing very fast, but it's very difficult to maintain that kind of growth after some point in time. So that is why they corrected a lot. So I would suggest wait for September results and then relook at the net NPA outstanding and then rework out the adjusted book value. And if it is still available at the same 1.7 times price to adjusted book value post September results, then one can consider. Otherwise, one should stay away.
Okay. There you have it. That's your view on RBL Bank. Lancelot, what are you recommending to your clients about this?
I would agree with Chokka's assessment because this bank had been valued very expensive in the past.
Sure.
Now that it's come down to 1.7, it appears to be attractive. But the key is going to be, it will require to raise further capital.
Yeah.
And if that capital does come in because of the reputational issues and the NPA issues, maybe a bit difficult for it to raise that capital at this point in time. So that could hamper the future outlook and growth for the bank itself. So given that background, as well as the fact that we are seeing every day or every month, as long as stress remains in the financial system, you are seeing new names coming up with potential defaults, and and that could again hamper the capital adequacy of the bank,
right,
and impact its growth potential. So I would actually stay away at this point in time, and then maybe take another 3 months to really look at how it goes.
All right, fair enough. Well, just wait and watch. That's the word so far. Foram, where do you stand on RBL Bank?
So I am little bearish on RBL Bank even at current market price, because not because of the financial performance but because of the management's approach.
Okay.
Because if we see RBL Bank did report a very good set of numbers even in Q1, which banks were guiding for a dismal outlook or a little lower outlook on the growth side. So that was a quarter when RBL Bank did report a NIM of 4%, more than 4%, and a loan book of more than 30%. So these are the kind of numbers which I think the large ones like HDFC Bank and the Kotak banks were reporting. So its performance were equivalent to the large cap banks, and that is why it was commanding a premium valuations which was equivalent to the large cap banks.
Sure.
But I think the management, the way, though it must be a little transparent approach, but the kind of coming out in the public and deliberately trying to say that we would be having a little weaker asset quality going forward, which literally spoke on the stock, and after that we do not see it rising to its original peak levels. So I am on the version of once bitten twice shy.
Right.
What is the probability that the government or that the management would again not do this kind of a thing? So let it stabilize, let it raise the capital that it's going to need, and then once things are clear, we will again have a relook at it. And the kind of defaults that we are seeing in every other default, we are seeing RBL's name also coming out in the list. So I think that at this current juncture there are various other banks where we have certainty and stability in the management's approach and in the performance. So I would want to skip RBL Bank at current market price and switch to another banks.
Okay, there you have it. Well, I think there is a consensus as far as RBL Bank is concerned at this point in time. It's well, all our experts prefer to wait on this one before actually moving into something like that. Well, on that note, it's a wrap on today's Hot Money. So I'm going to take a moment to thank all our experts for joining us and taking us through their views on various stocks and sectors that we've discussed. Ask BQ is up next. Stay tuned to BloombergQuint.